Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. NFT hype climbs to new highs. TikTok announces its first NFT sales. Dapper Labs partners with the NFL. And Ripple reveals a $250 million NFT creator fund. Is this finally the top, or is this just the beginning? Too cruel for pools. Two of Ethereum's largest mining pools announced their shutdown as China cracks down. Why hasn't Ethereum's hash rate dropped? DeFi surprise. Decentralized exchanges see a surge in transactions and users following China's latest crypto crackdown. Does this mean crypto can't be stopped? 22 million in transaction fees, please. The massive Ethereum gas fee that had people scratching their heads, and how this relates to a similar spat between Compound Labs and the users of Compound Finance. Institutions double down. From surveys to banks to fintech to new exchange-traded products, institutions can't get enough of crypto. Where is all that money going? Bitcoin's experiment in merit. El Salvador's own Bitcoin wallet reaches 2 million downloads within a month while it mines its first BTC using volcanic heat. How will the critics ever recover? Stablecoins in the sniper scope. US regulators plan on forcing stablecoin issuers to become banks. What we know and when we will know more. And a closer look at what caused the recent rally in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week saw some of the most bullish announcements for the NFT space to date. The first was TikTok revealing its flagship NFT collection. TikTok Top Moments will feature 6 NFTs of TikTok videos from famous folks such as musician Lil Nas X and serial entrepreneur Gary Vaynerchuk. TikTok's first NFTs will be minted on Ethereum, specifically Immutable X, a Layer 2 scaling solution custom-built for NFTs. The auctions for TikTok Top Moments NFTs will begin this Wednesday, and if you're interested, I'll leave a few links in the description just for you. And speaking of NFT-specific chains, Dapper Labs revealed a partnership with the NFL last week, which will see football, that is, American football, NFTs minted on the Flow blockchain. Dapper's partnership comes on the heels of a $250 million funding round which took place the week before last. For those unfamiliar, Dapper Labs is the company behind CryptoKitties, and their Flow blockchain already hosts basketball NFTs from NBA Top Shots. Now, it's not entirely clear when the NFL's NFTs will be available, though sources suggest this will happen before January 2022, when the football season ends. Less than one day after Dapper's announcement, Ripple revealed a $250 million money pile of its own. Ripple's NFT Creator Fund seeks to maximize the utility of the XRP ledger, which will soon be integrating with NFT marketplaces Mintable and Mint NFT. The fund appears to be open to both individuals and institutions, and those interested in applying can do so using the application form I'll leave in the video description. In the background to all these bullish announcements was China's continued crackdown on crypto, which managed to spook 2 of Ethereum's largest mining pools into closing up shop. The first to go was Spark Pool, which announced it would be ceasing all operations by September 30th. B-Pool soon followed suit, though it will gradually start phasing out its operations up until October 15th, which seems to be the day when the new crackdown really begins. I suspect this is because Alibaba also announced that it would be banning the sale of crypto mining equipment by October 15th. Now, these developments are quite concerning, especially since most Ethereum mining machines are made in China. However, neither of these events has negatively affected Ethereum's price or its hash rate. This suggests that other mining pools are picking up the slack, and it's possible that some Ethereum miners are still expanding their operations despite the incoming transition to proof of stake. It's also likely that many Ethereum miners have already left China following the crackdown on mining back in mid-May. Now, if you want to learn more about what happened there, you can do that by following the link up in the top right. If Ethereum holding its hash rate is not a sign of cryptocurrency's resilience to regulations, the adoption of DeFi by Chinese dissidents certainly is. After centralized exchanges like Huobi, Binance, and OKX announced they would be blocking Chinese citizens from accessing their sites, many turned to DeFi. This was confirmed by Chinese crypto reporter Colin Wu, who mentioned that his surveillance of social media chatter suggests Chinese crypto investors were scrambling to learn how to use DeFi protocols. One of the consequences was that the decentralized derivatives exchange DYDX saw more 24-hour trading volume than Coinbase. Many DeFi tokens also rallied, including Uni, suggesting traders were flocking to the Uniswap DEX. This underscores the importance of the trustlessness that is integral to cryptocurrency. The only thing you need to use these DeFi protocols is an internet connection. Now, in the case of some places like China, I suppose you need a little bit more than just an internet connection, but the fact remains, there's no stopping crypto without shutting down the internet. This is certainly amazing, but as crypto continues to see more adoption, the transaction fees to use these blockchains are only going to increase. One of the most extreme examples of inflated transaction fees was seen last week when someone paid $22 million in ETH to send a $100,000 transaction. Now, obviously, this was a big mistake on the part of the sender, which seems to have been DiversiFi, a decentralized exchange with close connections to Bitfinex. The latter was originally believed to be the sender. Now, if that wasn't strange enough, the anonymous miner who received the $22 million in ETH actually returned the entire amount to DiversiFi a few days later. This anonymous miner was apparently contacted by DiversiFi via Binance after they asked Binance to reveal the identity of the miner for correspondence purposes. As many people pointed out, the anonymous miner could have just as easily kept all that ETH and there would have been no legal recourse. That's because all transactions in cryptocurrency are final, and this is something which was apparently forgotten after a compound finance bug gave users an extra $80 million in comp token rewards. Founder Robert Leshner took to Twitter shortly afterwards to issue a veiled threat to anyone who dared keep the comp they had received, seemingly suggesting that they would be reported to the IRS. It seems some users took the threat to heart, as over $12 million of the additional comp rewards were returned within 24 hours. Now, make no mistake, if you received any of these comp rewards, they are yours to keep if you so choose, and any tax-related issues should be assessed with the help of a tax advisor. Robert has since apologized for his knee-jerk reaction, which was arguably uncalled for, given that Compound Finance's treasury holds over $1 billion in comp. There's also no shortage of institutional money flowing into Compound Finance, so it shouldn't take long for the protocol to recoup its losses, especially since institutional interest in crypto only continues to increase. According to a recent survey by Nickel Digital Asset Management, 62% of institutional investors with zero cryptocurrency holdings said they plan on changing that within the next year. Surveyed investors cited improved crypto regulations and reckless money printing by governments as the main reasons why they're looking to get exposure to crypto. This echoes the results of another recent survey conducted by Fidelity, which I detailed in a video. That'll be down in the description. Even banks are embracing crypto, as Morgan Stanley's European investment arm recently revealed it had doubled its holdings of Grayscale's Bitcoin Trust. One of France's largest banks is also looking to use mortgage-backed bonds to mint 20 million DAI using MakerDAO, as per their post on the MakerDAO governance forum. This is not all that surprising, given that a Chainalysis report noted France as the European country with the most institutional investment activity into crypto. In fact, Europe is slowly becoming the new hotspot for crypto trading, and Chainalysis's data suggests that most of this money is going into DeFi protocols on Ethereum. This might be why Grayscale added Uniswap to its digital large-cap fund, and this move begs the question of how serious these regulatory threats against DeFi really are. Grayscale also added Solana to its digital large-cap fund, and this further supports the notion that institutions are wandering further into the altcoin forest as they become comfortable with crypto. Some companies are even going as far as issuing their own cryptocurrencies, and one of these is the Revolut mobile banking app, which is looking to create a crypto coin akin to Binance's BNB. Revolut is currently waiting for approval from regulators here in the UK before moving forward with their crypto plans, and I wish them the best of luck because they are going to need it. Now, in the midst of all this crypto adoption, payment processors like Visa are positioning themselves as complementary parts of the ecosystem. And Visa's latest initiative to this end is its so-called Universal Payment Channel, or UPC. Visa's UPC envisions a, quote, network of blockchain networks, including public crypto blockchains and permissioned central bank blockchains for their digital currencies. This sounds eerily similar to Cosmos, and if you ask me, Cosmos has the upper hand. If you want to find out why, you can watch my most recent video about the project using the link up there in the top right. If you want to get a glimpse into the future of crypto, look no further than the success of El Salvador's adoption of BTC as legal tender. Though the initial rollout was a bit bumpy, the Salvadoran government's own Chivo Bitcoin wallet recently surpassed 2 million downloads. This is more significant than it seems because El Salvador's population is only around 6 million, and miners account for nearly a third of that figure. Because only people 18 or over can download and use the Chivo wallet, this suggests that around half of the adult population has downloaded it so far, and it's only been about a month since BTC became legal tender. This is contrary to the apparently widespread anti-Bitcoin protests in El Salvador we've seen in the mainstream media, something which Salvadoran President Nayib Bukele has been actively debunking on Twitter. Nayib also shared some footage of El Salvador's volcano-powered Bitcoin mining operations, and even shared a screenshot of what is apparently the first BTC being mined in this manner. El Salvador happens to have over 20 active volcanoes, and the abundant, clean, renewable, and constant energy could attract crypto miners from around the world. If you want to know just how crypto-friendly El Salvador is and how it got there, I'll leave a link to a video about that in the description. In stark contrast to El Salvador, the United States continues to float ever more unfriendly policies for crypto, and the latest is the current administration's intentions to regulate stablecoin issuers like banks. This is something I've been warning about for quite some time. As I've said before, US-based stablecoin issuers like Circle and Paxos will probably have no problem complying if these kinds of regulations come to pass. However, Tether is located overseas, and this kind of regulation would almost guarantee the delisting of USDT from all US-based crypto exchanges. Now, in the grand scheme of things, this wouldn't be that bad for the crypto market, but it really depends on the details of these upcoming regulations, which have yet to be released. All we know right now is that regulators want to create a special bank-like framework within which stablecoin issuers could operate. The exact recommendations will be included in the stablecoin report Gary and the gang are putting together, one which is now expected to be released at the end of October. What's interesting is that the current administration is apparently pushing for stablecoin regulations to be proposed by politicians rather than regulators, which they see as a last resort. This is good news because the crypto lobby is as strong as ever, and there are many vocally pro-crypto politicians who could sway stablecoin regulations in the right way. Now, you can learn more about what some politicians recently said during a hearing with the SEC Chairman Gary Gensler by following the link up there in the top right. Turning to the charts, we can see BTC has flown back above both the 200-day moving average and the 50-day moving average. In plain English, this means we are back in bull market territory. The question is, why? And if you subscribe to my weekly newsletter, you already know the answer to that. For starters, the infrastructure bill was delayed yet again. This is good news for crypto because there are two tax-related provisions in that bill. The first requires ill-defined cryptocurrency brokers to collect KYC on all their customers, and the second requires the counterparty in any crypto transaction worth more than 10 grand to be identified to the IRS. The infrastructure bill has now been delayed until the end of October, and this could give the crypto market the calm it needs to continue rallying. In addition to the infrastructure bill delay, SEC Chairman Gary Gensler also reiterated that he's open to approving a futures-backed Bitcoin ETF. The SEC also delayed its decision on a series of ETF applications to the end of the year, which again is good news because it means they're thinking, but bad news because it means we won't see an ETF until much later. When you combine these two things with all the institutional activity I mentioned earlier, plus the low balance of BTC on exchanges, what you see is what you get, a nice pump. So now that greed is returning to the crypto market, money is flowing back into altcoins. And this brings me to our weekly winners. This week's winners are OMG Network, Axie Infinity, Qtum, OKX Token, and Icon. OMG is rallying on the release of Boba Network, an Ethereum scaling solution that uses optimistic rollups. OMG is a way away from its previous all-time high, but it's certainly headed in the right direction. In terms of technicals, OMG is well outside of the Bollinger Band range, and its RSI score is near its ceiling. As I mentioned in my video about how to spot the top, this looks an awful lot like a local top, and we will likely see a correction in the coming days. It's a similar story for Axie Infinity's AXS coin, which is flashing overbought on both indicators. AXS's price pump is coming from the release of AXS Staking, which is offering some hefty rewards for the first 2 months. As for Qtum, it's reaching for the sky on account of its upcoming NFT functionality, for which the incentivized testnet was recently announced. Though Qtum's price action appears impressive in the short term, zooming out tells a sad story that's common for many altcoins that were around during the last bull market. There's not much to say about OKX as it's an exchange token. As I mentioned in my video about exchange tokens, the buyback and burn schemes employed by their associated exchanges result in gradual gains that are not nearly worth the risk. Finally, we have Icon, whose ICX coin is launching in anticipation of the launch of the Icon 2.0 mainnet later this month. Though ICX's price action is not pretty when viewed from a distance, if it can maintain its bullish momentum up until its mainnet launch, more gains could be on the menu this month. And that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, folks, you know what to do. Hit that like button, subscribe button, and bell icon too. If you want more of me, head on over to Twitter, TikTok, and Instagram to get a sneak peek behind the scenes. If you join my Telegram channel, you'll get the daily crypto updates you crave, and signing up for my weekly newsletter is a great way to get the tools, tips, and tricks you need to get paid. And of course, you can support the channel by heading over to the Coin Bureau merch store and picking up a shirt or hoodie, and now a beanie as well. Links to all these resources are in the description. Thank you so much for watching, and I'll see you all in next week's episode.